Welcome back. This is Stephan Huesler and today's topic, market regulations in China. After more than a year of regulatory changes, mostly in the online world, markets have dropped in shock as government declared an entire sector, the $50 billion after-school teaching, to be non-profit. This is extreme by any standard and naturally feeds into the anti-China narrative. The beginning of nationalizations. Xi is channeling Mao. And of course it doesn't help that China is still a young and emerging economy with often badly coordinated responsibilities and a lack of experience in communicating effectively. But it would be a grave mistake to give in to the "I told you so, China is communist and anti-market" narrative. Not least because China and Asia have begun what might turn out to be the biggest bull market in history. But also because the greatest risks investors face today are actually taken in the West. China has at least 10 years of rapid expansion ahead, and China is not nationalizing nor is it resurrecting Mao. China actually has a long-term strategy, not something we can say of most developed nations, and it has clearly lined out and published 5-year plans. And in my more than 25 years of traveling and investing into China, I've learned they also understand our Western systems inside and out. And China's party loves capitalism and believes it can build a capitalistic society that recognizes and works for the common, at the same time as rewarding excellence and success. Remember, China's businessmen are also China's partymen. And sometimes the exposure to the common well-being can be harsh, as when it is decided that the burden on families from education is too large, prevents many from having children despite the abolishment of the one-child policy. Or when it is decided that 1 million people will be displaced for the construction of a dam in order to avoid yearly flooding of a river delta of 250 million people. Now, who believes that capitalism means the absence of regulation? A view someone in the West have been adopting, believing that companies themselves should make the rules. In China, we have witnessed a well-informed and astute government in charge of the rules. As an investor, I continue to see sensible adjustments to a framework that arguably has areas of too much freedom. What would you say if Uber were to publish travel itineraries of your congressman? Some areas are just expanding and evolving extremely fast, especially where next-generation infrastructure competes with legacy tech. Did you know that Tencent, Alibaba and others hold banking and finance licenses? The Chinese are learning on the go on how to deal with hypergrowth, new tech, and not to lose sight of its long-term economic strategy to grow rich, fast and together. So what are these new rules? Data protection measures, disallowing monopolistic behavior, wage protection, and the promotion of income equality. Sensible adjustments in my book. But one can take the perspective one chooses. China is quoted as going after its monopolies. China actually said, curbing monopolistic behavior. In my view, China manages its growth well, and its leading companies grow stronger in the process. And this is what China wants, global leaders in anything. Tencent and Alibaba are not weakened by these new rules. They have just become stronger at half the price. This is a buying opportunity. Thank you for watching.